In this video, we are once again focusing on cash flows. This time, however, more on the cash flows from investing activities and what happens when a company sells items of property, plant, and equipment. And as you can see, I've got the same scenario here in front of me as I did before, but we will now focus our attention on this ultimate final point here, point B, or paragraph B, which discusses the sale of property, plant, and equipment. It's something that gets examined in the CFA Level 1 exam in standalone questions. So if it is something you want to get right in the exam, do keep watching and let's get solving. So, not reading through the scenario, we've done that before, but I will read point B. During the year, the company sold one item of property, plant, and equipment, which had a carrying amount of 18,000 at the date of disposal. The result on the sale has been offset against other operating expenses. And when we read paragraph A in the previous question or the previous video, we did see that there was a 6,000 gain from the disposal of a fixed asset included as part of other operating expenses. It wasn't an expense, it was an offsetting item, a positive item. Nevertheless, I know, and we kind of said this before, that the proceeds from the disposal must have therefore been whatever was the carrying amount of the asset, 18,000. Let me identify this as the carrying amount plus the gain, the 6,000 gain. So somebody paid us effectively 24,000. These are the proceeds, how much you received. So that's how much came in as cash. And we removed from our balance sheet something that was sitting there as 18,000, which creates a natural gap, a positive gap. Assets grow, and it's the result of generating this gain. Okay, good. I also want you to appreciate or understand how we reconcile the property, plant, and equipment line in the balance sheet, the PPE account, which is obviously here we've got property, plant, and equipment in this row, and just like before, I can see what the opening balance is. I can see what the closing balance is. I can see that there was an increase or growth of from 232 to 248. Well, that's growth of 16,000, I guess. And I want us to check out or compute, use this information to calculate what are the fresh purchases of PPE, of property, plant, and equipment. Because when you ultimately need to solve questions relating to the investing activities section of the cash flow statement, you're going to need to compute purchases of property, plant, and equipment, or the cash paid for these purchases. And trust me, it's not as easy as just looking at these two numbers and saying, yeah, PPE grew by 16,000, so that's what we purchased. No, you've got to take more factors into account, including these the carrying amount of the sold item, including things like depreciation, etc. So let's start with the opening balance of this account. So we began the period with PPE at a level of 232,000. And let's think about the operations which impact this account. Well, first of all, there was this disposal. And if you dispose of an asset, you remove its carrying amount from the balance sheet or from the relevant line. So this 18,000 represents something that came out. And kind of in its place, we introduce cash worth 24,000, hence the gain. Right. Something that also creates a negative effect when it comes to the level of PPE is depreciation, which was charged. And we know from paragraph A that depreciation of property, plant, and equipment for the year was over here 36,000. So that's another item impacting PPE downwards. So maybe negative, negative. And obviously, the result, or at the end of the year, we've got 248,000 carrying amount of property, plant, and equipment. So that's going to be the closing balance, and it's higher than the opening one. 248. And the only way to get from wherever we got to so far all the way up to here is because we must have purchased some additional items of PPE. So these are purchases of long-lived tangible assets. And this shouldn't be a difficult computation to perform. Let's check. We need to find one missing item. So starting at 232, less 18, less 36, this would take us down to a level of 178. And, if you take 248 minus 178, you come to the conclusion that purchases must have been 70. That's the answer to the question, what were purchases of property, plant and equipment? So be careful and make sure you don't fall into the trap of computing just some simple growth or difference and say that's purchases. No, take depreciation and disposals into account and you'll get the right answer, hopefully.